on the show right now. Prateek, hi, good morning. Good to have you on the show. What is it that you're making of the market construct? Because we've been stuck in this range for quite some time. Still a question mark on what's going to happen with the tariff deal. Now with Japan signing with the US, it seems like a little bit more hopeful that perhaps our turn also could be soon. And then the earnings season, which has had big positive surprises, but big negatives too.
Yeah. So a few thoughts. Many of the larger companies which have delivered results till date may have been a tad on the softer side, and yet you see the markets holding and the same companies' stocks also holding quite well. So that to me says that market has strength. On the other hand, companies which have tended to do better and beat expectations have seen stronger response in the market, which again feeds to the same thought that market has a lot of strength. And this is in spite of a very, very tough IPO, QIP market, which is really sucking out a lot of liquidity that may have been there in the market. So I would say a very good construct. Secondly, on the trade deal, we have done something. So, we have opened up a few cards when we do a trade deal with the UK, and we are doing one with EU. So what we have offered is slowly getting into the public domain. Similarly, we are seeing others do a deal. So Japan has done something, Indonesia has done something, and that gives us also a contour of what is possible. And on top of that, the strength that I believe Indian negotiators will have is the size of Indian market, which today may be a tad lower than Japan, but in future would be the second largest market in the world. So you are opening the gate of that market for a country. So I think once you know how various people are positioned, the positions can keep the realm of possibilities can keep narrowing down. And if they narrow down in the manner I am thinking, it can be very positive for Make in India, because the competing countries may be closer to 30%, and we may be closer to, let's say, if I have to put a range, 10 to 15%. So, fingers crossed, let it happen. We have seen many a times that you come close to it and it doesn't happen. So all possibilities may be there. But today, I would be optimistic that we get a deal which makes our manufacturing more competitive in today's largest market of the world. And for them, it will be a gate opening into tomorrow's largest or the second largest market of the world.
Well, indeed, to remain optimistic at this point in time, while it's taking so long for the trade deal to happen, that's the best strategy. Morning, Mr. Agrawal. This is Trishti also joining in. But which sectors do you believe that India stands to win with respect to the US-India trade deal? Because when these reciprocal tariffs were announced, a lot of these export-related sectors and stocks got a beating and a bashing. Where do you believe that India can really make a mark and stands to win as well?
There is a short term and a long term to it. If you look at the difference in cost of labor and the availability of labor, over time, manufacturing in this country should have an advantage over that. So US created one country. They could very well pull us up as well. And of course, the people have to be able and catch the opportunity. So it goes both ways. Now, in the immediate term, just think of it, US wants to do more of higher end, whatever makes US great again in their minds, but mostly that will not be labor intensive stuff. They don't have labor. So anything which is labor intensive, they would want to source from other countries. We are the most populous country globally. It should help those industries in India. We will need to tweak laws. We will have to make things happen. But it is a huge, huge opportunity that can come in. The not so good thing is very little of that is there in the market actually, in the immediate term. So how much of textile can you buy? It's a tiny space in the market. How much of leather goods and that stuff you can buy? Now, the whole of the Apple ecosystem is out of the market. It is not represented in the stock markets. Yes, the other EMS players over time may have an access to a US market possible, but today no. They are more engaged in doing in replacements, import replacement. So over time, things will happen. This is the largest market of the world. If we gain a better access, very good for us. But in the near term, not much changes for the stock market. Last time when it happened in Jan-Feb, this soon that we got into, to our mind was more to do with currency volatility and interest rate volatility. Yields there spiked, currency spiked, by 5% in 10 odd days. That made foreigners who are very sensitive to, dollar returns take money out of this country. Now, as things have stabilized, they are back. We got 4 months of inflows. This month is negative, but before that, we got 4 months of inflows. So for short term, our sense is look at currency markets and bond yields. What the deal does may have a very little immediate impact. Over time, yes.
Okay, Prateek Agrawal, so hold that thought. We'll just take it across to the National Stock Exchange where we have my colleague Ankur who's covering the event in conversation with the chairman of SBI.
The use of this? See, as we mentioned earlier also, even without this QIP also, a bank was well positioned to achieve the credit growth what it anticipates. Almost 5 to 6 lakh crore rupees we could have supported without raising this capital. But this definitely increases the confidence of the capital buffers what SBI is building. Thank you so much.
Okay, we will cut back to that conversation in just a minute from now. But yeah, SBI and what a sizable QIP it has been from then. Prateek, what is it that you're making of the texture of the Indian banking space now? And let's talk about the larger ones, SBI with its QIP. And then, of course, what we've seen from Axis, HDFC Bank and ICICI Bank so far.
So in terms of makeup of the books, they are starting to look very similar. And in terms of growth, again, they are starting to look similar. In terms of capitalization strategies, earlier we thought PSUs were reluctant issuers of capital. They would wait for the last moment and then raise capital. While we saw private sector raise capital when it was more available, and that ensured a degree of growth which was faster. For the first time, we see a PSU bank do that, and I hope that will be good for them. In terms of execution, I think a few banks have seen regime changes, consolidation, mergers, etc. So they are going through that assimilation phase. Something which saw that before is now having a better run in the market. And I think the performance in the stock market is showcasing that. One thought that we have is today, if growth rates are getting similar, ROEs, so somebody may be doing a lower ROA, but may be able to do a higher leverage because it is seen as a government entity. ROEs are tending to be very similar. If ROEs are very similar, then valuations over time should converge more, is the thought.
All right, but Mr. Agrawal, let's talk about the business that you are in. That is the AMC space, because with respect to some of those listed plays, we have already seen a lot of investor interest, and the fact is that SEBI has been pushing for the long-term agenda, while the broking companies, they have their own challenges right now. But between the broking companies as well as the AMC, just from an investor point of view, if you can help us analyze that, how are you seeing these markets and these industries rather shaping up, and what is really garnering the investor interest, if at all you can speak on that?
No, so let me answer it in this manner that some time back India was a country of savers. If we had surpluses, we went to the bank and looked at depositing it in the fixed deposits of various tenors, etc. Now, increasingly, country is becoming a country of investors. If people have surpluses, they come into the market. That helps the whole market ecosystem. Brokers will facilitate that trade. AMCs will get money. Now, one is a transaction business, which tends to be more volatile. The other is a AUM business, book business, which tends to be steadier. So depends on what is the risk profile of the investor. Higher growth possibilities will be there in a broker, but steadiness would be there in an AMC business. Now, if you are talking AMCs, then I think we are blessed with having our larger AMCs as really very disciplined guys who are holding the fort, even though you are seeing AUMs increase on margins. A very difficult thing to do. So when the top order is very good, it allows the whole industry to grow in a profitable manner. So the structure of the industry, while it is a very fragmented industry, the largest guy may be 12-13% on equity. It is a very fragmented industry, yet it is very disciplined. So there is money to be made if an investor is with an AMC over a longer period of time. Now, if we are looking at brokers, now brokers come in two varieties. One is brick and mortar, the other is online. Online brokers, if you just do broking, then it is one business. You benefit from the inflow of new traders into the market and the transactions they do that bring in growth. But if you see them as tech providers, ultimately you have got so many investors and you're making money on them. And there is a possibility of cross-selling loans, etc., to the same investor class. So others on UPI, for example, may have done it by burning a lot of money. Here you are making money and you have got investors and you can cross-sell loan products, you can cross-sell insurance products, etc. So if you see them as tech companies, the outcomes would be different. So it depends on the strategy of a company and how the investor is looking at it. But all said and done, we think capital market plays, the whole ecosystem has more to offer today versus lenders. It is a theme which you should expect to see in most of the portfolios that our house runs.
In addition to that, Prateek, I was just going through your latest note, and you've mentioned as to how it continues to be time for alpha in that. Where do you think are those pockets where one can generate alpha in this market?
So our belief is markets follow earnings growth. Now, for alpha to be created, you need a new space where earnings growth of a very different quantum can be had for several years. So a combination which in 90s, let's say software as an industry offered in early 2000 till, 5, 6 years back, a lot of the private banks delivered, and you see the quantum of excess returns these spaces delivered for very long. In the same manner, we spoke of capital market. You could look at new tech. You could look at electronic manufacturing, some spaces in defense which can grow significantly faster benefiting from both higher defense spends and indigenization. New tech, so renewables, and in future, as more players from EV, data center kind of spaces come in, all of these have few things in common. Newer spaces, very strong growth, not related to the overall growth of the economy, which somehow maps to the growth of the index earnings. So significantly higher growth than index earnings and a longevity of that growth sustaining. So that we think is the combo that you need for alpha. Today it is available in many spaces, especially for a house like ours, which is mid-sized. Many of our funds are actually smaller, and we can, find those niches where this is available and be invested.
Yeah, absolutely. Prateek, great to have you on the show today with us. Thanks for your time as always. Good to get
Thank
in
you.
your insights.
Thanks.
Let's just revisit where the markets have settled in at, and what seemed like a mildly in the green start. Where's that taken us? Actually, it's petered out from there. 25,098 is where we're currently at. While Tata Motors, Maruti